Hey everybody, Dave here, Hidden Freedom, and welcome back to another video. In this video, I'm going to go ahead and go through the pros and cons of King versus DIVO. So if you didn't see my DIVO video that I did quite a few months back, I think, go ahead and take a look at that video. And then also as a prerequisite, take a look at the King video if you have not seen that video, because I'm going to go in more in depth on these two ETFs in those two videos, which I've already done, and in this video, which I've kind of talked that I was going to be doing and promised I would be doing in a few weeks. So it's been a few weeks, so we're going to take a look at the pros and cons of each one of these and see whether or not which is the clear winner, which one's the clear loser. But you know, it also depends on what your requirements are. All right, so let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. M1 is still doing an amazing deal. If you sign up through my link, deposit $100 to open your account, you get $50 for free, I get $50 for free. That's a heck of a deal. They don't do this all the time. So go ahead and get on that deal before it ends, and the link is down in the first pinned comment. All right, we're just gonna go through an overview here to refresh our brains. Here is DIVO here, so DIVO. And this came out in 2016. It is a highly managed ETF. We got the distribution yield, which we'll look at it in a different view as well, but 4.9%. It does pay monthly. Expense ratio is 0.55%. And also this has 29 positions in it, although that's technically not right. It's got actually 24 positions, and then it's got roughly, I think, 5 open covered calls at this time. So it's really 24 positions open. If we scroll down here a bit, we can see the top holdings. There are the top holdings right there. So we got United Healthcare, Chevron, McDonald's, Apple, Procter & Gamble, Visa, Microsoft, Home Depot. And we got JPM, and we got GS, Goldman Sachs there. So those are some pretty darn good holdings, a lot of stuff that we'd probably just have in a regular dividend portfolio as well. Here is DIVO right here off of FinViz, and we can just kind of see this been trending up slowly over the last several months here. It is down 2.72% year to date, and we're showing the yield at 4.85%. Here is DIVO's holdings currently. And this is basically downloaded from 2/16/2022. So like I said, they got a bunch of individual positions on, 24 to be exact here. And then they have these covered calls down here at the bottom. So there's 24 here, and then there's 5 covered calls down near the bottom here. And I did watch a video recently where they're talking to one of the Amplify DIVO ETF personnel, and they said they're going to get more aggressive with the actual covered calls in 2022. So that'd be interesting to see if they do that. So as long as I've been in this ETF, they've not put a lot of covered calls on. I've never seen them have covered calls on everything. So this is pretty normal for them to only have, 5, 6, 7 or so on at a time. That's kind of what they do with this ETF. What they do with this ETF is opportunistically look for covered calls on certain stocks. But they can also, he also did mention the fact that because 2022 might be a rough year, it might be a flat year, it might be a volatile year, it makes more sense to put some more covered calls on. And that makes complete sense to me. It just does not look like they've done it yet. These look like they expire Friday, so that's February 18th. So I'm going to actually look at what they put over the weekend, or if it updates over the weekend or not, to see if they put more on and what they put on too. All right, what is DIVO's dividend CAGR? I calculated the dividend CAGR out to be 5.34% over the last 3 years, because anything before the 3 years, anything before 2019, for example, DIVO was a quarterly payer at one point, and then they converted to be a monthly payer. So the numbers get thrown off and all that, and their first full year of monthly dividends was 2019. So, and not to mention, to compare King, which has not been out as long as DIVO, I decided to go 2019 through 2021. And there's the calculation right there, 5.34%. That's not nothing to shake a stick at, but it's also not chump change either. Like I said, when you calculate this number, you got to make sure that you take out the annual capital gain. For example, it was 85 cents here in 2019. I think there was another one in there as well that I had to take out. Just be aware of the capital gain, because in my opinion, that shouldn't be counted in the CAGR at all. Yeah, it's money that gets paid out to you, but it throws off the dividend CAGR, and so make sure you take account for that, because Seeking Alpha, for example, will throw it in the mix sometimes and not know what to do with it, and then it throws the numbers off. All right, we're looking at King here. So this is First Trust King, and I talked about it a few weeks back, so I'm not going to go in great detail on it. Came out in March of 2018, so a little bit less time than DIVO, about 2 years less or so. 0.75 expense ratio there. And we scroll down here. Let's see here. What do we got? We got 129 holdings, which is not correct. There's roughly about 61, 62 holdings in here. And then they run cover calls against those positions. So just be aware of that as well. And then let's see. What do we got the yield? What does Schwab show the yield as? They're showing the distribution yield at 3.6%. Scrolling down, let's look at the positions to compare here, the top holdings anyway. We got Nucor there. We got Albemarle, ALB. Why have I never heard of that company? That's interesting. And it is a Dividend Aristocrat, by the way. So we got ADM, Archer Daniels. We got People's United, Cisco. We got AbbVie, ExxonMobil, McCormick. We got Cardinal Health. And we got Bexton Dixon, BDX. So kind of interesting, because I've not seen some of these companies before, and these are all Dividend Aristocrats. So, I'm not gonna, like I said, I'm not gonna talk about the nuts and bolts of every of these ETFs, right? This is a Dividend Aristocrat ETF, so which we'll kind of talk about here later on as well. But here is King right here. This is off of FinViz, so it kind of looks very similar to DIVO, where it goes, it's falling a kind of like an up channel there, but it's not moving drastically, right? And then we got it's down 5.44%, and they're showing the yield at 3.3%, so that could be off a little bit. The report card from Schwab showed it at 3.6%, and that sounds better to me, to be quite frank with you. We're looking at the holdings in First Trust King here, and like I said, it's got about shows 122 positions here, but it's roughly half that, because they have all these individual positions on, and guess what? They do roughly up to 20% of the notional value for each position. They put the covered calls on. So that means that it's, not capping the upside, right? 80% of the upside could be there if these stocks want to go up, and they're only really capping the upside by roughly 20% of the complete value. So they put covered calls on for everything that's in their portfolio. So in this case here, roughly about 61 positions, and here are all the covered calls down the bottom here. These also look like they expire on Friday, February 18th. That is the main expiry, by the way. From the last time I did a video on this, which was just a few weeks ago, AT&T was still in the portfolio. So it does look like they reconstituted the portfolio and took AT&T out, because that did drop off the Dividend Aristocrat list. We are looking at the dividend CAGR for King here, and I went back to 2019 to kind of compare it best to DIVO. We just did 3 years there. There is a capital gain distribution that I had to take out, all right? And they're showing the dividend CAGR, the 3-year dividend CAGR at roughly 2%. All right, this is kind of what everybody's probably wanting to look at, right? We had comparison side by side for DIVO and King here. And we went back as far as we could, which it tells us off the top here. We can only go back to 3/27/2018, because that's all the information we have for King. So it brings the information forward for DIVO to that date. Then it does a head-to-head comparison here. So we're going to look at the dividends reinvested here. And we got total return 67.62% for DIVO, and we got 57.29% for King there. Average annual total return 14.19, and we got King there at 12.34. So if you're $10,000 invested in March of 2018 today, actually would have been a yesterday, I suppose, you would have had $16,763 for DIVO, and then for King, you would have had $15,730. And just looking at the chart over here, it's not that bad. Like, it looks like King has a little bit more of a pullback. That was probably the March 2020 low is what my guess is. And then, you know, I mean, it does pull back a little bit more than it did there. And we can kind of talk about that a bit as well. But in general, you know, it's not that far off, you know. It shows 10% off here, which is interesting. And then it shows the average annual is being only off by 2%. If we actually look here without the dividends reinvested, it's only actually off by roughly about 6.6% or so. So that's pretty interesting. Obviously, that's not just about the total return. For some people it might be, but there's also some pros and cons to each one as well, which we need to take into account. All right, this brings us the pros and cons for each one of these, and this is interesting. And then at the very end of the video, I'll just give you my 2 cents on it. In addition to that, I'll kind of just show you my position in my portfolio as well. All right, DIVO pros, higher yield. So yes, it is a slightly higher yield than King by quite, a few percentage. So if that's a consideration for you, then maybe DIVO is the answer for you. Higher dividend CAGR, yes, another couple percent higher on the dividend CAGR as well. Lower expense ratio. It is roughly about 0.2% lower expense ratio than King. We got more history there. Yes, it's got about 2 more years of history on it than King does. So it pays monthly, and that is actually a huge pro for DIVO. And, that is a consideration for a lot of people. And I know that it is probably for me as well. I don't weight it as high as some other things, but potentially more growth. All right. There could be some more growth here, and that's just because they don't put cover calls on against everything. Even though King is only doing 20% of each position, you're up to, the liberty of whatever the DIVO managers want to do. And so that could potentially give it more growth. In addition to that, it could have more growth just because there's some stocks in DIVO that are not in King. And there's a reason why that's the case, because not every stock that's in DIVO is a Dividend Aristocrat, right? Apple, Microsoft, for example, Home Depot, for example, are not Dividend Aristocrats. And guess what? There's a lot of growth in those stocks, and those are not in King because King is a rules-based ETF that only picks Dividend Aristocrats. And unfortunately, Apple and Microsoft are not Dividend Aristocrats, even though I think Microsoft only has 5 more years to go and it will become a Dividend Aristocrat. That brings us down here to the DIVO cons, and these are just out of the top of my head, all right? So not as diversified, okay? Obviously, it's only got 24 positions versus King's 61, or roughly about 61 positions there. So it's not as diversified. That could be a concern for some people, but it's not got everything covered, and you could be overweight in a certain sector as well. Not as many calls, all right? So that is the case for DIVO. They selectively put those cover calls on when they think a stock may not run up a lot. They strategically put the strikes where they think they should go and try to capitalize off of making income, in addition to not trying to choke the position out where you don't get any gain out of it either. Up to the ETF managers, all right? So this is probably a con, in my opinion, for DIVO, because you're really at the liberty of those managers of the ETF. Like I said, it's a highly managed ETF, means they pick the positions that go in the portfolio. They pick stocks that are high quality, low volatile stocks, by the way. We looked at the positions, they're solid. And then they also were at the liberty of what, positions or cover calls they put on. So that is not the same as King. King is rules-based. Whatever's the Dividend Aristocrat goes in the portfolio. They do 20% cover calls against the positions. It's strictly rules-based. It's not a lot of thinking me for the managers on King versus DIVO. We're kind of at the liberty of what they want to do. So that brings us to the King pros here. More diversified. So more diversified than DIVO. We got 61 positions there. That's almost roughly 3 times the amount of positions as DIVO. That to me means it's more diversified. You're not going to get hurt if a stock goes belly up. And honestly, really something shouldn't really be going belly up. But look, GE was a Dividend Aristocrat at one point. And guess what? They just, went on a major decline and then, cut the dividend and just fell off the list and, started selling off a bunch of stuff. And nobody even really looks at GE anymore. A lot of people just pass them up. It really rarely comes up in a conversation anymore. So you're more diversified in King. And I like that aspect of King for sure. So that is a pro. It's rules based, so that means whatever's in the aristocrat list, they reconstitute probably, I think, monthly, and then they take the positions out that fell off the list. They put the positions in there that got added to the list, if anything got added. And so that's pretty simple, right? There's not much, interpretation there for the managers, and so that is a pro. Companies with a track record there, that is a pro. So yes, we got all the companies in Kings for their positions, all have at least 25 years of raising their dividends. So there's a track record there, and there's some stability there of them paying out all of those dividends, unless they've been paying out with debt, which they shouldn't be. Then that is a pro, because that means all the positions in King are pretty stable and they know how to at least operate a company for at least 25 years. Potentially more stable is a pro for King, just meaning that there's more stocks in there and the companies are probably lower beta. Because I know, for example, like Microsoft, Apple, Home Depot, for example, that's in DIVO, or just higher beta stocks. So that means that most likely a lot of the stocks in King are just more stable. They're less volatile. There's more positions in the portfolio as well. And a lot of the Dividend Aristocrats are just big old conglomerate type stocks like Procter & Gamble, for example. And they're just more stable. More call options. So we do have basically call options against every one of the positions in King. So if there's 61 Dividend Aristocrats in there, there's 61 calls on. And like I said, they only run about 20%. So they do give it 80% of legs to move up. And so not capping the upside of the actual portfolio and of the ETF. So you should get some growth out of it as well. And we obviously looked at that. We do get some growth out of it, not quite as much as DIVO. And that makes sense because there's some major growth stocks in DIVO that are just not Dividend Aristocrats, so they're not in King. What are the King Kongs? Oh, King Kong. So I guess that was Tarzan. King Kong. It's not King Kong, it's King Cons. All right, not as much history. So we got about 2 years less history on King than we do on DIVO. So 2018 there. Still, still what, about a couple years there, 3 years there of history. So I'm not going to complain about it too much there. We got, more history coming out. And so that is a con, though. If you're looking for, 10 years of history there, well, King is not it. Well, heck, DIVO is not either. All right, higher expense ratio. So yeah, the expense ratio is 0.75, which is kind of high given what they're doing. I wonder if at some point King will become a monthly payer. I can see them doing that possibly down the road, maybe. A lot of people are just going to snuff off King because it has higher expense ratio. And it really kind of shouldn't, or at least start paying monthly. They might start paying monthly down the road. I wonder if that would actually sway some people. That would be a big plus for sure. And because honestly, I would say, 0.75 is not crazy for what they're doing. I know some people will probably say, "You're crazy, Dave." But guess what? They're doing a lot of work for you, right? They got to go out there. They got to look at the Dividend Aristocrats list, take the ones out, that fell off the list, put the ones in that came in the list. And then they got to run the covered calls against, 60 something odd positions. That does take work. But I don't know if it's 0.75% expense ratio worth. especially if DIVO is kind of doing the same thing and it's a highly active managed ETF and that's a 0.57 if I'm not mistaken. I had some people balk at that expense ratio on DIVO. Oh, VIO is 0.03%, Dave. It's like they just don't understand that these are active managed ETFs, and to run options requires work. They pay out monthly. That requires some headache for accounting purposes and all that. So trust me, 0.57% is actually pretty darn low for an expense ratio for what they're doing. But 0.75, you're kind of close there, King. That's why it's a King Kong. Pays quarterly. We just talked about that. You could see them possibly change it to a monthly. And it'd be kind of weird, though, if they did switch to a monthly and then they raise the expense ratio. But, whatever. Right now, they pay quarterly. DIVO, when it first came out, paid quarterly as well. So we'll see if they end up changing that in the future. That would definitely help. That would definitely help King's, case. All right, have you noticed here, I have not mentioned taxes at all, and I'm not going to talk about taxes in this video for either one of these ETFs, because in the future I'll be doing a tax video on DIVO, and because I don't own King, I don't know how it's taxed. I'm pretty sure it's going to be very similar to DIVO. It's going to be, a mix of NII or long-term capital gains, qualified dividends, unqualified dividends, and also possibly a little bit of return on capital. And I will be doing a future video on DIVO taxes just alone, because I will be getting documents on DIVO because I own DIVO. So I will be making a tax document on DIVO. Just so you know, the overlap for these two ETFs is 6 of the 24 holdings in DIVO are in King. So there is some 6 aristocrats in DIVO. So there is a little bit of overlap between these two ETFs. To put my money where my mouth is, let's go and look at my portfolio here. So let's go to current portfolio. So scrolling all the way down here, because that's where the income ETFs are. We got DIVO right here. It's already highlighted. We got $251,000 into DIVO. So I'm putting my mouth where my money is. I'm a big believer in DIVO. I talked about it in last week's video. I was going to be cutting out QYLD, XYLD, and then, even slash Nusi down to $50,000. And I went in more into DIVO and JEPI. If you haven't seen that video, go and take a look at the video on the top right over here. So, I don't know what's going to happen going forward. I'm probably going to be building out SCHD up here at the top. And you're thinking, Dave, why isn't that one not in the running in this particular video? It's like, well, because it's not a covered call income ETF. That's why. So maybe I will talk about that one in the future, because DIVO and King are dividend, income ETFs, that do cover calls. SCHD does not. But so I don't compare those two. They're not in the same rung on the ETF food pyramid. So that's the reason why I didn't talk about SCHD in this video. But I will be most likely building out SCHD going forward. And honestly, after looking at King, I could even add that to the portfolio. I know some people are turned off by the, expense ratio, or it doesn't pay monthly. But at some point, I'd have to look at the overlap between SCHD as well, just to kind of get an idea of what the overlap is there. And a lot of these positions I have in my dividend portfolio are Kings and aristocrats as well. So if we scroll to the right over here, look at all these aristocrats. There's a bunch of Kings there. So all my, a lot of my individual positions are aristocrats and Kings already. So a lot of those are going to be inside King, and I don't want to have a bunch of overlap there, right? I can have DIVO and King and be okay with that, because I think it's only 24% overlap compared if you're actually looking at DIVO's positions, and that's acceptable to me, because the positions that they're actually overlapped in are very good positions. But I can see myself building out SCHD, and then maybe at some point, maybe get into King, but it might not make any sense for my portfolio at the time anyway, because I might not even need that income. And I haven't looked at doing cover calls again at SCHD. It's probably not even an option. Probably something I'm not going to consider anyway. So that's the thoughts there. Let me know what you think of King versus DIVO. And, would it be consideration? What would they have to do for you to get into King? All right. Okay, so we talked about it in this video. If you have any comments, questions, concerns, leave a comment down below. Until next time, we'll see you next video. Thanks for watching.